as this is really the massive game changer. And I mean, success in this regard in the long term, I think, has the potential to make Tesla the most valuable company in the world by far. If you have fully autonomous cars at scale and fully autonomous humanoid robots that are truly useful, it's not clear what the limit is. Regarding energy storage, we deployed 4 gigawatt hours of energy of storage products in Q3. And as this business grows, the energy division is becoming our highest margin business. Energy and service now contribute over $500 million to quarterly profit. The Cybertruck, I know a lot of people are excited about the Cybertruck. I am too. I've driven the car. It's an amazing product. I do want to emphasize that there will be enormous challenges in reaching volume production with the Cybertruck, and then in making the Cybertruck cash flow positive. This is simply normal for when you've got a product with a lot of new technology, or any new vehicle, brand new vehicle program, but especially one that is as different and advanced as the Cybertruck, you will have problems proportionate to how many new things you're trying to solve at scale. So I just want to emphasize that while I think this is potentially our best product ever, and I think it is our best product ever, it is going to require immense work to reach volume production and be cash flow positive at a price that people can afford. Often people do not understand what is truly hard. That's why I say prototypes are easy, production is hard. People think it's the idea, or you make a prototype, you design a car, and it's not as though designing a car is that just anyone can do it. It does require taste. It does require effort to design a prototype. But the difficulty of going from a prototype to volume production is like 10,000% harder to get to volume production than to make the prototype in the first place. And then it is even harder than that to reach positive cash flow. That is why there have not been new car startups that have been successful for 100 years, apart from Tesla. So, I just want to temper expectations for Cybertruck. It's a great product, but financially, it will take, a year to 18 months before it is a significant positive cash flow contributor. I wish there was some way for that to be different, but that's my best guess. So really the demand is off the charts. We have over 1 million people who have reserved the car. So it's not a demand issue, but we have to make it, and we need to make it at a price that people can afford. Insanely difficult things. In conclusion, we continue to focus on ramping production while maintaining positive cash flow, and we continue to target and expect to have around 1.8 million vehicle deliveries, as stated earlier this year. The Tesla AI team is, I think, one of the world's best, and I think it is actually by far the world's best when it comes to real-world AI. I'll say that again. Tesla has the best real-world AI team on Earth, period. And it's getting better. And lastly, I wanted to thank all of our employees who are making a lot of extra effort during uncertain times. Thank you very much for your hard work and the impact that you're making.
Thank you very much, Elon. And our CFO, Vaibhav, had some opening remarks as well.
Thanks, Martin. Vehicle deliveries in Q3 outpaced production, and we had yet another record quarter of profitability in our energy business. Congratulations to the Tesla team for their continued focus on operational excellence as we navigate through a period of economic uncertainty higher interest rates, and shifting consumer sentiment. As Elon mentioned, our Q3 operational and financial performance was impacted by planned downtimes for our factory upgrades. This was necessary to allow for further factory improvements and production rate increases. Despite such factory shutdowns, our cost per vehicle decreased to approximately $37,500. We saw sequential decreases in material costs and freight. Reducing the cost of our vehicles is our top priority. On the operating expenses front, R&D expenses continue to rise due to Cybertruck prototype builds and pilot production testing, combined with spend on AI technologies like full self-driving, Optimus, and Dojo. We have and will continue to make investments in these areas, and hence our capital expenditure and R&D will continue to grow in the near term. However, our focus is to continue making investments through positive cash flow from operations. This year itself, we have generated operating cash flows of approximately $8.9 billion and free cash flows of approximately $2.3 billion. Our other businesses are becoming more prominent on a standalone basis, with energy business leading the charge primarily from the growth in megabyte deployments. Our services and other businesses on a year-on-year basis also continue to show positive momentum as we benefit from our growing fleet. As regards our pricing strategy, in addition to what we have shared before, I want to elaborate that most car buying happens with one or other form of financing, and hence we also view pricing in terms of monthly costs for the customer. And therefore, as interest costs in the US have risen substantially, it has required us to adjust the price of our vehicles to keep the monthly cost in parity. We've tried to offset such adjustments via our focus on reducing costs. However, there is an inherent lag in cost reductions, which in turn impacts margins. To that extent, we recently announced a partner vehicle leasing program in the US, whereby you can get a standard range Model Y for as low as $399 a month. In conclusion, as we navigate through a challenging economic environment, we're focused on reducing costs, maximizing delivery volumes, and continuing making investments in the future, in particular AI and other next generation platforms.
I think that, hey, what's up, guys? Haven't seen you in a bit. How's it going? I think that's actually a pretty important point on the cost of the vehicles. Like, if you just barely bought a Tesla and then the price is now like 20% lower than what you paid, that kind of feels like a shaft. And we all know that Mr. Musk has no problem shafting his investors as he prepares to flip Twitter back on the market for twice what he paid or whatever. I'm sure he's not going to give anyone a discount. But it is a good point on discounting these Teslas. Is probably has more to do with interest rates and keeping the vehicle production pipeline going in a similar way as it was before interest rates. It's a point I hadn't thought of.
We believe.
Craig, how many Cybertruck deliveries?
Let's go to the question.
Slight vehicle, like
all right, we'll just go to the
not that
top.
hard. But if you want to do something radical and innovative and something really special like the Cybertruck, it is extremely difficult because there's nothing to copy. You have to invent not just the car, but the way to make the car. So the more uncharted the territory, the less predictable the outcome. Now I can say
one of my favorite quotes from one of my old bosses in the Snapchat days, I won't name him, but he was explaining how difficult it is to build something from scratch. And he was like, it's like trying to build an airplane while you're taking off on the runway. I thought that was pretty good. That's what Tesla is trying to do. They're trying to get all these vehicles built, but like they have to build the factory to do that. Like they got to build the machine to build the machine.
Say that if you say, well, where will things end up? I think we'll end up with roughly 250,000 Cybertrucks a year. But I don't think we're going to reach that output rate next year. I think we'll probably reach it sometime in 2025.
Something to celebrate.
That's my best guess.
Something to
Thank you.
celebrate for Mr. Musk.
The second question is, can you provide a progress update on the 4680 cell, particularly progress towards performance improvements and cost savings outlined on Battery Day? Thank you.
Sure thing, Martin. 4680 cell production in Texas increased 40% quarter over quarter. Congrats to the Texas team for producing a 20 million cell off of line 1. Texas is now our primary 4680 facility.
I was forced to do that line. You don't know the story. I was forced against my will.
With the increased volume and yield improvements, cell costs consistently improved month over month within the quarter, although we have a lot more work to do to achieve our steady state goals. And that is our priority. The Cybertruck cell, with 10% higher energy than our Model Y cell, started production on line 2 in Texas.
That's pretty cool.
This quarter, we convert to building 100% Cybertruck cells to simplify and focus the factory as we ramp all 4 lines in phase 1 over the next 3 quarters. Phase 2 of the Texas 4680 facility is currently under construction. The additional 4 lines incorporate further capital efficiencies over phase 1. And our target is for them to start producing in late 2024. Lastly, in Cato, we're retooling to enable large-scale pilot runs of our next-generation cell designs. Cato's long-term goal is to be the launch pad for new cells, 1 generation ahead of our mass production facilities, enabling faster iteration and smoother ramp-ups of new designs.
Thank you. The next question from institutional investors, could you please provide an update on capacity expansion plans for companies' factories in Berlin and Austin, and the opening schedule of Gigafactory Mexico?
Dude, ask when Optimus Bot comes online.
Berlin and Austin factory, the current priority is
ask what. Here's what I would ask.
From our existing
Let
line.
me give you my question because that's boring as fuck. What do you think the impact is going to be from the Optimus Bot on, first of all, factory workers and like all this drama around unionizing? That seems like a pretty big threat. But maybe they'll just like work. Each person will have like a couple of Optimus Bots or whatever. Secondly, let's just leave it at the Optimus Bot. That's my question: is what is going to be the impact to the bottom line of Tesla if all of the factories are built by robots? Like they're not even going to be built by people. Now, maybe we're like a decade away from that. I don't know. I don't know how good these actuators are.
By laser focus on efficiency improvement.
Let's go to the top.
Why to be the rates for the vast majority of people buying a car is about the monthly payment. And as interest rates rise,
that kind of does actually make sense.
Monthly payment that is interest increases naturally. So that's if interest rates remain high, or if they go even higher, it's that much harder for people to buy the car. They simply can't afford it.
Let's go higher.
And we are tracking, I believe, at this point for Model Y to be the best-selling car on Earth, but not just in revenue, but in unit volume. If you compare that to the other vehicles that are, number 2 and number 3 and whatnot, they cost much less than our car.
Nice to YouTube. Here you go, YouTube.
So, we're just hitting law of large numbers situations here. I know people want us to advertise, and we are advertising. I think there is something to be gained on the advertising front. I don't think it's nothing, but informing people of a car that is great that they cannot afford doesn't really help. So
give them jobs.
That is really the
UBI,
thing
bro.
That must be solved, is to make the car affordable.
I don't know. You could buy back my 3, right?
Get a lease. Buy it for any amount of money. Or they simply can't afford it. They can't afford it. So this is a big deal.
Yeah, help them afford it. Make it don't even make it affordable, but help them afford it.
The next question is, when do you expect Model 3 Highland to be available in the US? I just wanted to address that. Unfortunately, we don't answer product-related questions and timings on earnings calls, so let's go to the next one. Current sell side consensus assumes that Tesla will deliver 2.3 million vehicles in 2024, representing 28% growth versus 2023 guidance. Is this growth rate achievable without any mass market launches in 2024? And when does Tesla expect to return to its 50% long-term CAGR?
Thanks for the question. when we look at 2024, there are a lot of moving pieces. Elon just talked about what is happening in the macroeconomic environment. So we're focused on growing our volumes in a very cost-efficient manner and are carefully reviewing all our options, and we'll be able to provide a much more meaningful update at our next earnings call.
Yeah, I mean, the risk of stating the obvious, it is not possible to have a compound growth rate of 50% forever, or you will exceed the mass of the known universe. So
that is how numbers work.
But I think we will grow very rapidly and much faster than any other car company on Earth by far.
Thank you. Next question is, do you have an approximate timeline in mind for the robotaxi, driven or non-driven? What excites you most about how this project is progressing?
Well, the robotaxi is like necessarily non-driven.
I like this one.
I guess I'm very excited about our progress with autonomy.
Look at that.
The end-to-end, nothing but nets, self-driving software is amazing. I drives me all around Austin with no interventions. So
it's like if Jensen Huang and Elon Musk had a baby.
It's clearly the right move.
Doesn't look anything like them, even a little bit.
I don't know, it's really pretty amazing. And also that same software and approach will enable Optimus to do useful things, and enable Optimus to learn how to do things simply by looking. So
there's a big difference.
Extremely exciting in the long term.
1 second. Like there's a big difference between a bunch of if statements in code that's saying like if this then that, if this then that, and a trained model that, I mean, it's really about efficiency and costs, and I think that actually has to be, and reliability actually, because you're never going to account for every edge case in a bunch of switches. Like you need, well, you still need switches, but you need like billions of them, or however many parameters are in these AIs.
As I mentioned before, given that economic output is number of people times productivity, if you no longer have a constraint on people, effectively you've got a humanoid robot that can do as much as you'd like. Your economy is quasi infinite, or infinite for all intents and purposes.
Yeah, that's the end of capitalism, if it ever becomes infinite.
And I don't think anyone's going to do it better than Tesla.
I feel like they're purposely not using his face.
But their robot lacks a brain. They're like the...
Yeah, they're like purposely not using his face.
Yeah, lacks a brain. And then you also need to be able to design the humanoid robot, in such a way that it can be mass manufactured. And then at some point, the robots will manufacture the robots. Now, obviously, we need to make sure that there's a good place for humans in that future, and we do not create some variant of the Terminator outcome. So we're going to put a lot of effort into localized control of the humanoid robot. So basically anyone will be able to shut it off locally, and you can't change that. Even if you put like a software update, you can't change that. It has to be hard coded.
Thank you. The next question is, why was the price dropped on FSD if it is getting better and robotaxi is expected so soon?
That's a great question.
Well, we just wanted to make it more affordable. Some
what?
People try it. I think over time the price of FSD will increase proportionate to its
they're
value.
not all bad.
So I would regard the current price as a kind of a temporary low.
Thank you. The next question is again on
Dude, look at how
FSD.
badass this is.
Mercedes is accepting
Don't you
legal
think-
liability for when its level
Hold on.
3 autonomous driving system Drive Pilot is active.
Don't you think it would be like the only people on the planet that need a Tesla are cops? That's the only people. Everyone else can just mosey around town. Like the cops are the only guys that need to go from like 0 to 100 in like a tenth of a second or whatever. Obviously, whatever it is, really fast so that your ass slams into the seat and you feel like you're on a fucking roller coaster every time you launch. And that's just the beginning. So like if anyone's gonna build like the war machine, it should be Tesla, because they're already going to have first of all, they're building like, what's the difference between a war machine and a rocket, right? So they already have a network of expertise in like, not really defense or whatever, but just like building really complicated physical things. And so anyway, I really, for some reason, think it's important that we get a Tesla Interceptor. I think that's important.
Is Tesla planning to accept legal liability for FSD? And if so,
Liability.
Oh wait, what's the answer?
Well, there's a lot of people that assume we have legal liability, judging by the lawsuits. We're certainly not being let off the hook on that front. Whether we would like to or wouldn't
Depends
like
on what
to.
you're marketing, bro.
So,
I mean, I think it's important to remember for everyone that Mercedes' system is limited to a few roads in Nevada and some certain
I mean,
cities
this
in
one's pretty
California.
cool.
It doesn't work in the snow or the fog. It must have a lead
good
car,
one.
marked lanes, only 40 miles per hour. Our system is meant to be holistic and drive in any conditions, so we obviously have a much more capable approach, but with those kind of limitations, it's really not very useful.
I think some people understand the profundity of the Tesla AI system. Most people, but very, very few. It's basically baby AGI. It has to understand reality in order to drive. Baby AGI.
thank you. The next question on Optimus. Will Optimus be working on Gigafactory lines next year? If so, how many would you guess will be deployed?
I think at this point we are not ready to discuss details of the Optimus program, but we will provide periodic updates online. So as you can see, where Optimus a year ago could barely walk, and now it can do yoga. So a few years from now, it can probably do ballet.
Sounds good. And the last question from investors is, neural net path planning represents a significant advance in capability and safety for FSD. What steps is Tesla taking to make this technology available outside the US?
Yeah, our approach has been to try to get it, the more places we try to make it work, the harder the problem is. So the reason we don't do it in all countries simultaneously is that it would take much longer to make it work anywhere at all.
Ooh, that's kind of cool.
So that's why it's currently just North America. And also for most parts of the world, you have to get approval before deploying things, whereas in the US, you can deploy things at risk, or at least you take liability for what you deploy. So it's whereas most countries require
That's real.
some sort of extensive approval program. So we only want to go through that extensive approval program when we think it's kind of ready for prime time in that country. I apologize that it's not in those countries, but
Wow.
we keep finding ways to make it better, and it needs to drive. It needs to drive such that it exceeds the even unsupervised, significantly exceeds the probability of injury of a human. Significantly better.
Yeah, just don't hit things. Good cardinal rule. I think I heard that is the cardinal rule. don't crash. Good
I think
rule.
we're tracking to that point very quickly. Obviously, in the past, I've been overly optimistic about this. The reason I've been overly optimistic is that the progress tends to sort of look like a log curve, which is that you have kind of rapid initial improvements that if you were to extrapolate that sort of rapid, fairly linear rate of improvement, you get to self-driving quite quickly, but then the rate of improvement curves over logarithmically and starts to asymptote. That's now happened several times. I would characterize our progress in real-world AI as a series of stacked log curves. I think that is also true in other parts of AI, like LLMs and whatnot. A series of stacked log curves. Each log curve
about that.
gets higher than the last one. So if you keep stacking them, keep stacking logs, eventually you get to FSD.
Thank you. Let's now go to analyst questions. The first question comes from Will Stein from Truist. Will, please go ahead and unmute yourself.
Great. Thanks so much for taking my question, and thanks for all the updates today. We learned earlier in the call, it sounds like you don't think the truck will ramp to significant volume until its third year of production. Should we have a similar anticipation for the ramp of the next-gen platform, or is there any reason that we should be maybe more optimistic or pessimistic about the ramp profile there? Thank you.
Yeah, I mean, to be clear, it's not really the third year of production. It's kind of like the 18th month of production is roughly my guess. So it's just that it'll happen is that it starts this year, spans next year, and gets to 2025. So technically there are 3 calendar years in there, but there's actually only 18 months, not 3 years. I would be very disappointed if it took us, and that would be shocking if it took us 3 years. But 18 months from initial deliveries to reach volume and reach prosperity with an immense, I can't tell you how much the blood, sweat, and tears level required to achieve that is just staggering. I've been through it many times. And then here we go again.
Similar path for the next-gen platform?
I mean, there's like unique complexity to Cyber.
Yeah. I mean, Cybertruck is.
Let's be honest.
Yeah, I mean, we dug our own grave with
We spell
Cybertruck. Nobody, in general, I probably nobody digs their grave better than themselves, and so, it is. Cybertruck is one of those special products that comes along only once in a long while.
This could be a V2.
And special products that come along once in a long while are just incredibly difficult to bring to market, to reach volume, to be prosperous.
Weird. What is this?
It's fundamental to the nature of the
Too
newness.
much war.
So now the sort of high volume, low cost, smaller vehicle is actually much more conventional. In terms of like the technologies we're putting into it, we didn't have to invent how to bend full hard stainless steel or have mega 9,000 ton castings or the largest hot stamping in the world or new high voltage.
What? Where'd we go?
Level that is unheard of in the auto industry. Evolutionary quite in the same way as the Cybertruck. I think it will be quite a fast ramp. So as Lars was saying, we're doing everything possible to simplify that vehicle in order to achieve a units per minute level that is unheard of in the auto industry.
We're getting closer.
Yeah, I mean, the simplification makes it easier to automate. It also makes it lower cost. Yeah, it's intrinsically lower cost.
Yeah. Let's be clear, it'll be cool, but it's utilitarian. It's not meant to be, fill you with, and magic. It's can get you from A to B. And it'll be still beautiful, but it's utilitarian.
There's some keyword in here that's making it not look real. Unreal Engine, I bet.
Yeah,
actually.
Yeah. The Cybertruck has a lot of bells and whistles.
Gold rolled steel exterior.
All right, thank you very much. Let's go to Pierre Ferragut from New Street Research.
Hey, can you hear me fine? Yes?
Yeah, we can hear you.
Hey, I have a follow-up question on FSD and pricing and adoption. So I agree with you that as FSD improves, we should see its value increasing. But I guess the ultimate value of FSD, which is to be able to handle a robo-taxi, is not going to necessarily interest everybody, and you have a bit of a degraded version that would be like a chauffeur service where the car drives by itself, but you still have to be in the car and around, and then there is the hands-on, eyes-on version of the service. And I guess, there should be much lower.
Let's go higher for longer, for real.
Who gets a kind of variance of the service that could have
see how low we can get these Teslas priced,
and more expensive one that would remain at a lower penetration level. So I'm just wondering if you're taking that. And last but not least, the simplest version of FSD are available and are going to work from a technical perspective probably before the ultimate robotaxi version can work, if ever.
Okay, I want to go Tesla.
I'm wondering how you take that into account in how you're thinking the financial contribution of FSD over time, and whether you could evolve your pricing along that kind of tiers to increase adoption.
Yeah, I mean, a fully autonomous vehicle, I think Pierre, sort of the economics of a fully autonomous vehicle are truly astounding in a positive way. When you look at passenger vehicles today, they only get about 10 to 12 hours of usage per week. That's, if you drive an hour and a half a day on average, that's roughly 10 hours a week out of 168 hours. And then there's also, you got to have parking and insurance.
That's so cool.
Take care of the car. It's there's a lot of overhead. So
what is it? I like it.
I mean, it's the economics of the system are just insanely positive. If given that the car, all of the cars we're making and have made for a while, we believe are capable of full autonomy. So then if you're able to, say, increase the utility of that car by a factor of 5, which still only means that it's being used for maybe 50 hours a week out of 168. So you're still assuming that still assumes less than a third of the hours of the week are.
That's not that long, 50 hours in a week?
Increase the value of that by 5, but it still costs the same. You have something, then we're a hardware company with software margins.
CDI.
Pierre, do you have a follow-up?
Yes, I'd have actually a follow-up on a different topic for you, Vaibhav, if that's okay. It's about your gross margin in the quarter. Could you give us a sense of like in how the gross margin evolved sequentially, how much was the impact of idle costs, how much was like the sequential benefit, I imagine, of production ramping at Berlin and Austin. And then I saw like this massive jump in energy storage, very strong positive surprise. So if you can give us the background on that and tell us, how we should think about that gross margin going forward.
Okay, thanks for that question. So in terms of, we have a few different aspects of your question. So if I just look at from Q3 perspective, obviously factory idle time had an impact. It did impact by, I won't give you the exact percentage, but it had decent impact for the quarter. And, when you look at the other pieces which we're trying to do, we did see certain of our other factories ramping up pretty well, right? And they actually contributed pretty well to the margin for this quarter. In fact, one of the factories came pretty close to, in terms of per unit cost, to where we are for one of our other established factory, which is Fremont. So that was a positive in the quarter. When it comes to energy margins, Megapack deployment was the key driver there, and that product has done well. On the cost curve also, we've been able to do a lot there. But I do want to caution that, Megapack deployments are a bit lumpy. So yes, we had a great quarter this period, but depending upon where we are trying to deploy the product
at once
in different markets, you would see periods wherein there would be downward pressure on deployment because of us trying to get the product to the exact place where
product in transit. Yeah.
Yes.
Yeah.
Okay, thank you very much. Let's go to Rod Lash from Wolfe Research. Rod, feel free to unmute yourself.
Thanks. Really nice to see the rate of vehicle cost improvement despite the downtime that you took. You've taken now about $2,000 out of the average vehicle cost over the past year. Can you give us maybe a sense of the rate of improvement that you see from the changes that you alluded to, the factory changes you alluded to? Is there a way maybe to convey the speed of improvement on your existing product from here? And then related to that, can you share the timing of your next gen, the lower priced product that you talked about earlier this year?
Yeah, so just in terms of product margins, there are lots of puts and takes when you look into this. There are certain things which we control, and there are certain things which we don't control.
This is awesome.
We expect that we'll get some benefits from our cost reduction efforts, which are all underway. But on the other hand, we just finished our factory upgrades late in Q3. Some of these factories are still in the early ramp phase in Q4. We're still not up to where we want those factories to be, so they'll impact in the near term. Plus, like Elon mentioned, we're going to be ramping Cybertruck, which is going to be another headwind which we'll be dealing with. On top of all that, there's overall uncertainty in the macroeconomic environment, which even makes it harder
look at that. That's freaking cool.
Precisely as to where we land. But yes, this is something which, it's an evolving thing which we're observing every day and reacting to it on a daily basis.
I would just say that on the cost reduction efforts, like we are unflagging in our pursuit of additional cost downs for 2024. We do have a good pipeline of them in work on both the engineering side and the factory operations side. And, our intention is to maintain or exceed the trend that you saw. We're trying as hard as we possibly can.
The timing of the next gen product, can you share that?
That's cool. Not at this time.
Okay. And just as a follow-up, obviously price is also a driver of demand, but that's obviously not happening in a vacuum. And you mentioned that, I think you mentioned it at some point during this call, that you're also maybe hitting the law of large numbers on some of your products. Can you just share how you're thinking
That's kind of
about
cool, right?
price
I didn't even think it looked
elasticity
like that.
just at this point and in this macro environment? And any thoughts along those lines?
I think that there's very significant price
Damn.
elasticity. I mean, to be totally frank, if our car costs the same as a RAV4, nobody would buy a RAV4. Or at least they're very unlikely to. It's worth noting that a lot of these incentives, like the tax credit and whatnot, they're actually very difficult for the average person to access because most people do not have 10 grand, or even $7,500 burning a hole in their bank account.
Well, that's the first problem to
people
solve.
are living paycheck to paycheck, and
Well, that's not so bad.
with a lot of debt. They've got credit card debt, mortgage debt. So yeah, that's reality for most people. It's sometimes difficult for people who are high income earners.
Well, since you have $1 billion, you could give 100 million to every single person on the planet, and then nobody would be hungry. But you just refuse because you're greedy.
Is earning $50 or $60 or $70,000 a year, which is most people. So that, like, for a lot of people, like these tax credits, just they can't front $7,500 for 18 months or even 6 months to get for the tax credit, and they actually don't.
That's why we were moving to Puerto Rico.
Then I'm $7,500 in taxes.
Not really joking.
So it's really just the vast majority of people is how much money do they have to pay immediately and how much per month. That's it.
$5 million a year
right
should
there.
be plenty.
And a car is still much more expensive than a RAV4 when you look at it that way.
Money's if the economy is
one
infinite, what is
negative,
money for real? Like
when
if
you
there's a
look at,
Tesla bot
car
everywhere,
buying
hold
in
on.
general,
If these Tesla bots are real, like what is the economy? If a robot can do infinite work, if I can buy a robot for $1,000 a month and make $1,100 a month, then it can be organized into an infinite economy. And so I think that's what the world has to deal with, is all of our problems are those of luxury and excess. We have too much.
we're trying to get to the next set of EV adapters. And
Not an EV adapter, just
next.
Who wants a great car?
Exactly.
It's not sometimes you get these honestly, I'd say it's like somewhat correlates with the why doesn't everyone work from home crowd. I'm like, this is like some
crazy.
Real Marie Antoinette vibes from people that say, why does everyone work from home? Like, what about all the people that have to come to the factory and fill the cars? What about all the people that have to go to the restaurant and make your food and deliver your food? It's like,
if
what
they're
are
all
you talking
Tesla
about?
bots, what are you talking about?
How detached from reality does the work from home crowd have to be? While they take advantage of all those who cannot work from home. So
advantage.
You have to say
you've taken every advantage you've ever could that was ever given to you.
Because it mattered.
Who's not going to take advantage?
So,
like that is an advantage to take it. I'm going to take that.
I just can't emphasize how important cost is. It's not an optional thing for most people. It is a necessary thing. We have to make our cars more affordable so people can buy it. And I keep harping on this interest thing, but it just
it's a game.
Raises the cost of the car. We're looking at an internal analysis, which
bullshit. It's seriously all bullshit.
We think is more or less on track. That when you look at the cost or the price reductions we've made in, say, the Model Y, and you compare that to how much people's monthly payment has risen due to interest rates, the price of the Model Y is almost unchanged.
Not me, bro.
If you factor in the change in interest rates.
Yes, which is the thing. That's what I'm trying to say. The thing that matters is the monthly pay. It's how much money do they have to put down, and do they literally have that in their bank account, or will the check bounce? And then what is the monthly payment?
Sometimes you gotta bounce a check.
That monthly payment
just to remind yourself that it can be done.
It's just a number.
Forgot about
and that number
It's been a
has
while.
to not cause their bank account to go negative. That's it. So, going from near zero interest rates to
and modernity.
the current
Yes.
very high interest
Exude
rates.
it. Exude it. Ooze it.
The actual monthly payment is basically the same. It's just a bunch more of it is going to interest. And there are some incremental challenges beyond that, which is
good.
The difficulty of getting credit at all has increased. And so the number of people who simply cannot get credit, period.
I like it.
Even if they've got a job and everything's solid, the banks are, a little gun shy on handing out credit, given that a bunch of them kicked the bucket earlier this year.
There's also just fewer options. Even if they want to hand out credit, there's fewer banks to go to.
It's like, does your bank still exist?
Yeah.
Well, if your bank does not exist, you have to establish a relationship with a new bank.
They're all crooks. They're all crooks.
A lot of regional banks
They're crooks.
died, and I mean, even Credit Suisse. I mean, geez, that was a shocker. Got a 160-year-old ish Swiss institution that doesn't exist anymore. That's mind blowing.
Yeah, they're all crooks.
And
I thought Germany bought them or something. Didn't somebody buy them? The Swiss bank? I thought that was handled.
I mean, commercial real estate obviously is in terrible shape.
I don't think that.
Credit card debt has been rising significantly. The credit card interest rates are usurious. Over 20% interest rates, meaning which over time it becomes obviously extremely punishing. Because if somebody's paying 20% interest on their credit cards, it means they cannot pay them off. Now, if you cannot pay them off and you're still accruing interest at 20%, that's headed
Puerto Rico or Mexico.
Thank you. Let's go to next question from George from Canaccord.
Thank you for taking my question. Just to focus on the cost per vehicle, coming down in future quarters, as you discussed in your written remarks. I'm curious as to what the levers of that could be. Is it more scale, more factory utilization? Is it material cost reductions? Is it things like gigacasting? I mean, could you just kind of give us some data points to give us confidence that that's going to come down over time? And if I can sneak one in, please. There are press reports, and I know how perilous it is to believe some of these, but they say that you've included radar as an option in some Model Ys in China, and I'm just here to ask if that's true, and if so, why? Thank you.
We've not included radar. We have radar as a Tesla designed radar as an experiment in the Model S and X. That's it. We'll see whether that experiment is worth it.
I bet it's useful.
But there are no plans to integrate radar into
Weird. I've never seen that.
3 and Y. Just as humans drive well, and in fact, an excellent human driver can drive with amazing safety simply with their eyes. The car will far exceed the average human safety just with vision. Far.
Opulent or opulent?
Because, the car is looking in all directions at once, and we don't have eyes in the back of our head. So, and the computer never gets tired and never gets distracted, get drunk, hopefully. So radar is, it's not. What really matters is how much does it affect the probability of an accident. And in order for the radar to be effective, you have to be able to do radar-only braking, or you have to do actions that are radar-only. Otherwise, you get this disambiguation problem between vision and radar. That's why we actually turned off the radar in cars historically that we had. All 3 and Y used to have radar, but we turned it off because the radar actually generated more noise than signal. Now, the Tesla designed radar is a high-resolution radar that has some potential to be useful, but the jury is still very much out on whether that is in fact the case.
cost saving?
On the cost question, I guess from the vehicle side, like, as Drew mentioned earlier, we are always trying to engineer our products to be cheaper to make and more efficient to make. That comes obviously on the engineering side as we come up with new innovations, but as well on the supply chain side with our partners. We work with them to automate some of their lines, remove their, bottlenecks and their high costs as well. On the logistics side, getting parts to the factory. It's not, yeah, go ahead. It's not like a one thing that you have to attack cost everywhere. And we do it ruthlessly at all times.
Operations efficiency, all of the above.
Yeah, I mean, I would say there's a whole laundry list of things which we are chasing. We internally call it the cost attack, where we're literally going line by line and saying, how can we make it better? And it's a grind.
The grind.
It's time.
It's a game.
It's fun to grind. It's fun to grind though, right?
But pennies.
No, you just like go. It's like
just
chop wood.
$40,000 car, and roughly 10,000 items in that car.
Just grind it out.
That means
Feels
each thing
good.
on average costs $4.
It's like slow, steady
so in order
progress.
to
Grind it out.
get the cost down, say by 10%.
It sucks.
You have to get 40
Sucks.
cents.
Okay, that's pretty cool.
Out of each part on average. It is
like
a game
that.
of pennies.
We play it willingly.
We play it
Yeah,
religiously.
we've done it many times, and even something as
Wow.
simple as like a
I like
sticker.
that a lot.
Like there's too many stickers internally in the car that nobody ever sees. There's something as simple as a QR code. You might think,
Well, a
putting
penny,
QR
if
code
you
on-
do it
on
like
part one,
1,000
just
times,
throw on
turns out
there.
to be
It's like, well, if-
math I
actually,
should
use
do.
that
$10
QR
bucks.
Costs a penny.
I don't
Yeah,
know.
exactly. And then inevitably, sometimes the QR code doesn't go on properly, or you
It's
can't
hard
read
to
it
do
properly,
math on the
and it
internet.
Stops the line.
It's harder.
Costs more than a penny.
Yeah, absolutely.
So
So it's chipping away with it. I mean, it is trying to. It does feel like digging a tunnel with a spoon at times.
Very much escaping prison.
Yeah.
On top of it, like we said, we did some factory upgrades, so we expect volume to go up. That would also bring some savings from higher production. But then on the flip side, we're going to be ramping a new product like Cybertruck, which we talked about. So, yeah, so those are the real puts and takes that we are working through.
Yeah, but there's not like some accidentally, some brick of gold that we shot in the car, unfortunately. And it's, we're trying to be very rigorous about improving the quality and capability of the car, because it's like any fool can reduce the cost of a car by making it worse, and just deleting functionality and capability, and that's how I call this sort of the any fool. It's like if you want to lose weight and you say, well, I need to lose whatever 15 pounds right away. Well, you could chop your arm off, but then you're sitting there with one arm, and you're still fat. so sort of like, you gotta work.
Speak for yourself, bro.
You actually have to eat less food and work out. That's the actual way. And
Doctor's advice.
Yeah, it's not, super fun because food is delicious. And I personally am not I don't love working out. I know some people do. I wish I did, but I don't. Unless moving the mouse consists of working out, in which case I love moving the mouse.
All right.
Let's take a pill,
go
dude.
To Colin Langham from Wells Fargo.
Pop a pill.
Colin, can you unmute yourself?
Oh, sorry about that. Do you hear me now?
Yes.
Oh, great. Thanks for taking my question. You said in the commentary that you're not going full tilt on the plant in Mexico until there's signs that the economy is strong. Can you continue at a 50% CAGR without that plant? And where would that come from? And any color on what you mean sort of not going full tilt? Could that plant get delayed indefinitely?
We need the Mexico plant. No, we need it.
No, we're definitely making the factory in Mexico. We feel very good about that.
We need that.
We put a lot of effort into looking at different locations, and we feel very good about that location. and we are going to build a factory there, and it's going to be great. The question is really just one of timing, and there's going to be a broken record on the interest front. It's just the interest rates have to come down. If interest rates keep rising, you just fundamentally reduce affordability. It is just the same as increasing the price of the car. So I just
they're going to do it until they break it, and then they can use that as the excuse. Or maybe they just will stop fucking with everyone. I don't know.
When we should build the factory. We're going to build it.
Who can say? But we do know markets are manipulated, and we do know it's a game.
Initial phases of construction next year. But I am still somewhat scarred by 2009 when General Motors and Chrysler went bankrupt. So, that's now 14 years ago. It's
long memory.
That is seared into my mind with a branding iron. Because Tesla was just hanging on by a thread during that entire time, and when we closed off a financing round in 2008 at 6 p.m. December 24th, Christmas Eve, and if we had not closed that financing round, we would have bounced payroll 2 days after Christmas. So we actually closed that round on the last hour of the last day that it was possible. Stressful, to say the least. And then barely made it through 2009. So I'm like, I want to just, I don't want to be going at top speed into uncertainty. A lot of wars going on in the world, obviously, as well.
And we have room here, like in Giga, Texas. You said we still have room in this building. It's not full with Cybertruck and Model Y, and there's plenty of growth opportunities still to have inside the building where our team already is.
We also have 2,000 acres here.
Yeah, so there's also a bunch more.
We're actually only occupying a tiny corner of the land that we have. But we could technically do all the scaling necessary just here. Personnel is our biggest challenge in that the greater Austin area only has, generously, the greater Austin area only has 2 million people. So people are moving here, and they're willing to move here, but there's somewhat of a housing crisis. They got to live somewhere.
Okay,
So I don't know. I'm just curious. I'm not saying things will be bad. I'm just saying they might be, and I think Tesla is an incredibly capable ship, but if we need to make sure, if the macroeconomic conditions are stormy, even if the best ship is still going to have tough times, the weaker ships will sink. We're not going to sink, but even a great ship in a storm has challenges. Now that storm will apply to everyone, not just us, and not just the auto industry. It apply to everyone, I think. Apart from necessary sort of staples like food and stuff, but.
Well, it's almost time for me to get some food. But we'll hang out as long as
if interest rates start coming down, we will accelerate.
All right.
If anybody's got any guesses on this,
the guess is after the right people position themselves and the wrong people get fucked, then we'll reverse the game and play their reverse Uno card. But not until then.
Big time. And in 2017 through 19 were not picnic either. That was very tough going.
And they don't give a fuck who gets hurt in the process. Obviously, that's what it means to be a politician. It's all collateral damage.
Because people tend to hesitate to buy a new car, and if there's uncertainty in the economy. So it's car companies do very well in good economic times, and they don't do as well in tough economic times.
It's almost like they're
So
secular.
it's just, whereas if somebody's selling bread, then I think, that people still need to have bread. Yeah. Yeah, you need bread. If you need food all the time. But new car, you don't have to have bread this minute.
Especially if there are wars going on, and then that impacts your sentiment.
Yeah. I mean, if people are reading about wars all over the world, if this,
So we go by the
buying a new
order
car
of flow.
tends to not be front of mind.
All right. Unfortunately, that's all the time we have today. Thank you very much for all of your good questions, and we'll see you again in 3 months. Thank you very much.
Goodbye. Nice job, Tesla. I kind of like the music. Keep that going. So, like I've been working on a few different projects that are starting to come together. One is, okay, that they ended it. So one is an auto trader, which is kind of trying to look at the order flow of trades, figure out what incoming trades are kind of like indicative of something unusual. And you can do that in a few ways. Basically, you take a time interval. So far, this is the idea. We've been workshopping, me and this guy, GDT, have been workshopping. We're still up? Okay, yeah. The idea is with GDT, everyone just tuned out. Well, bye. No, I'll get back to it. I'll remember. Oh yes. Okay. So you just take a time interval, and that I'm not sure. Like I think it needs to be like probably a second actually, but then you need to capture like previous and post a second. Because I think you're really looking for two things. You want to aggregate by symbols and timestamps and price. And so I think you do these different aggregations on the order flow at an interval. So you have a rolling window where you're adding every trade, you're processing every trade in a rolling window of, let's call it 60 seconds. I think right now we've got like a minute or something. But still, you're just constantly adding new trades and removing old trades from that window. So then from within that, you need to start aggregating things. And because you need to find patterns. And so what are the patterns you're going to look for? Ticker is obviously the main one, right? Like within that ticker, let's say there's only one order for that ticker. Probably not going to happen, but whatever. But it's for 1,000 units. Okay, that's interesting. Easy check. What if you have 10 orders on the same ticker for 100 units? Okay, also interesting, but harder to detect. And so that's why we have to aggregate things. And so like if we aggregate, I think by ticker, by price, and by, what was the other one? I just said it. So anyway, I know what it is. And there's probably more. But like through these aggregations, we can, I think, spot unusual options. And then we can really dial in and customize that. So for example, if you see a bunch of options come in with different exchange IDs, but they're all the exact same price, and they all happen within like a second of each other or whatever, that's a sweep. That's a sweep order. And if you see like 5 exactly of the same orders and then like one big order or whatever, I think that's like called a split or whatever. Like there's a way to fingerprint, I think in the longest of terms, probably ever more through AI or whatever. But I think just using, like not that crazy engineering, you can basically create a fingerprint in these different aggregations and get a pretty reliable signal. So then you're analyzing all this order flow and you begin to be able to infer things, which is cool. So like, what if the size of the order, like the quantity, the total units, is greater than the entire open interest of that contract? So they bought out more than was held. that is very interesting. And I think these contracts also, the more I'm like, I wish I could just ask somebody, but I don't know. Like, I think this is how it works, where an individual contract's IV can change depending on who buys and sells it. And so like for that reason, you always want to have a lot of volume in the contracts that you hold. You don't ever want to just be like the one guy holding a contract, because then a big buyer or seller could come in and just like tank your IV. And like, you know, that could happen at the wrong time or whatever. And so like you have to be, one of the ways, just like with stocks, that you can stay safe in options is by participating where there's a lot of volume. And that way, if there are a lot of sellers of that, it's more distributed across many owners or whatever. And it's harder to, because there's buyers, and it's not just, it's not so easy to manipulate the contract, I think, is how it works. So anyway, what was I talking about? Oh yeah. So I got these different, like systems I've been developing to try and, one, automatically hedge, but two, continuously use margin and options safely. Like anyone who goes back in history will know that I've been a fan of Robinhood for a long time, but like one thing they advertise is that their platform is a safe place for new investors, which is fucking hilarious. It's basically handing out guns at a playground and walking away and then picking the bodies that you find. Like, that's what I think it is, literally. They have all these different tools and mechanisms that they do that they can use to help people realize losses. And when really there's, through technology, such a low-hanging fruit opportunity that they haven't pursued it, shows the entire culture of the company. But like the really low-hanging fruit opportunity is to like build automatic insurance and a bunch of trade automation and things that basically de-risk the market so that it actually is a safe place for new investors. And that's not just something you put on a YouTube video or on a slogan or whatever. It actually, I think that there is a way to de-risk the markets by, I think, double-digit %, because so like one of these programs I got, it fired off today. You can see it. I'll just show you my shit. You can see it. I don't care. So let's show you this one. Terminal. Boom. Nice. Oh, I need that window. So, what are we doing? I was going to show you, the logs of this contract, because it's already been like, there's no danger in showing you this. This isn't like something anyone could use against me. What is it? That's funny. That's not even relevant anymore. Okay, so what is it? So I put on a call on Hood at $8, which is, I think, a pretty good strike price for him or whatever. And when it initially got the index, it had a 98%, basically 99 delta, basically, which is what I'm targeting. Because once you're above 99 delta, it doesn't move, so it's not going to fire off hedges. And today it fired off 2 hedges because it was a new system. And it's not like terrible, but that is what happened. And so I can see now that like that happened. So like my index delta, that was the original naked call delta of 99. So something happened with the price where it caused the delta to decline, I think, to like 94. And at that time, can I just like go look at it? Well, yeah, let's see if I can look at it. COPM2 logs. Let's just say .pm2 logs, and then let's put this into, oh my God, these are gigabytes. Wow. 5 gigs on market flow. Holy shiz. That's good. I looked at these. Let's ask GDT how I could show you. Hey GDT, how can I see the file sizes within a directory from terminal? See if it gives me something. Gives me something. What? It can't be ls. I don't know what that was. Yeah, that's ls. lslh. Oh, I think that is what I want. Okay, yeah, that is what I want. Look at that. 3 gigs. That's crazy. 1 gig. A meg. I thought there was like a 4 gig or no. 4. No. I guess that's a 4 gigger. That's crazy. That's crazy. So yeah, like what was I on this track about? Oh yeah, I guess I make a lot of logs because of all these different operations I'm doing. I should actually clear that out. I'm gonna do that while we're on the air because that's fun to do it that way. .pm2 logs, and where to go? This right here. Delete. Yeah, delete. Cool, done. So if you want to see the file names, let's just see what this command does because that'll be cool. I love when he like writes that stuff for me. I don't even have to look it up. Well, there's not going to be anything. They already created it. Well, let's just use it here. That's cool. See, he's full of useful tricks. That's what I love about GDT. But it doesn't seem to match the same. Oh, wait. Yeah, we're not even looking at the same data set. Okay, fine. Fine. It's a long day. I got up at like 3 a.m. to get this system going because I had ideas. And so it is coming together. So now one of the goals with this is to create this platform that can like auto trade and then to sell it to the fine people of the world. But that's a pretty far off ambition. Right now, I'm just trying to get it like fully operating for myself. So like today, I had a bug in the paper wallet where I'm like less careful. And it caused all my loss prevention mechanisms to like just not get triggered. And so it created like a ton of losses, like a ton. And it's, you know, whatever. Like one of the things is it does have a much lower cost basis, but there's all sorts of like little bits of logic that I want to add to these traders. Primarily though, I personally think it's dumb to try to guess the price of anything. I don't think anyone knows. I don't think anyone can know. The price of anything can double or fall in half at any moment. And that's because aliens can invade or they can discover a breakthrough technology at any moment. And so you kind of have to be like prepared for both sides, how to do it. I think the easiest way is, as they say, dollar cost average. But if you go to a platform like take Robinhood, for example, guaranteed they're going to give you the worst execution of the day, whatever they can make the most spread on. With my system, it'll split your buy into intervals that you can define. You could do once a day, 3 times a day, every 5 minutes, whatever you can think of, whatever you can imagine. Like, because there's a finite set of controls, right? Like there's a finite set of parameters. That means there's a finite set of knobs and things to turn and dials and all that shit. So let's say you can set up an auto buy that has your sentiment, so you can be like bullish or bearish, and that is going to size the trade. But then it's also going to look at the order flow and the technicals and all of like the machine learning you can do on the data and the history and the seasonality and all of the macro and every indicator you can plug in the system, including just training on your own portfolio's seasonal unique variables that will only be relevant to your portfolio. And through all of these mechanisms, I believe it's like not only easy, but like wait, did I say easy? I didn't mean easy. I meant possible, which is almost the same thing. If you think about it, given infinite like tries or whatever, if you're just going to keep on trying. And so as long as it's actually technically possible is the main thing. Like, can you technically spot unusual options in the order flow? Yeah, I just told you how to do it. You aggregate. You do it by ticker, price, volume, not volume. Then once you aggregate, you look for those kind of things. What is the other one that we're aggregating on? Timestamp. And maybe even like exchange and trade condition. I don't know. I have to keep learning. But you find these different ways to aggregate over different intervals. But I think a trade is generally done like a one timestamp. And so, because otherwise those are just multiple trades throughout the session, even if it's from the same trader, they're just getting a different price than everyone. Like the trade has to happen instantly. So I think the primary coalescent variable or whatever is timestamp. Well, obviously other than symbol, like ticker. So yeah, anyway, like I think it's really possible to de-risk the markets and by using a set of tools that consider everything not as with any opinion, just as it is in the moment. And so like how does self-driving work on the Tesla? It's not a bunch of like it doesn't have a lot of foresight. It's only analyzing what's right exactly in front of it. Like maybe it sees about as far as a person sees. And so maybe better actually, because it has more cameras and more angles and, maybe even the future can tap in and do a mesh network and share feeds through the air. I don't know, whatever. I'm sure they'll do whatever they can, right? So like it's possible to de-risk the markets. I just think through like automation and then some of these other things. So like what I was going to show you with those logs, I guess what I did show you is I got a Delta 99 contract. This is for testing, but I wanted the contract. And so I bought it. And then of course I bought it like at the worst time as I always do. Now, so what does it do? Unfortunately, it takes the gap that was created, and then it is supposed to buy this put, but because of user error, because of my input being wrong, I misconfigured it a little bit, and it bought two puts. And they were also like aggressive puts as well. So Hood ain't going nowhere for a while, at least a couple of weeks or whatever. But then the idea would be that the system would also know when to sell those puts and all sorts of stuff like that in the future. But right now it's basically just like looking at Delta, but it's pretty reliable because now I have it's getting more reliable, I should say, because now I have a socket connection to the price and to trades. And so I'm getting quotes and I'm getting trades. And on each of those, I can get a price. And in the future, I'll be able to model the price and in different circumstances, have that return a different outlook because I'll have to model the price. Honestly, I already am. Like, what is it? It's the center of the bid-ask spread. And so like the price is kind of easy. But what is it going to be based off of like what interval, what period of time is... I think a little bit possible to model, but like obviously it's anyone's guess. Okay, so that was all like a really long update, but it's not even close to done. So stay tuned. So like I got to tell you about all this shit that I've been working on. So with the automation side, like that's the buy side. What I'm talking about here is the sell side. So yeah, I wanted this 99 delta contract to test with, and the system did inevitably have a decline, and it triggered the put. And so it is completely possible. What's also possible is this this move that I am a fan of, which is to sell a credit to buy a put, but I think it's just cheaper to buy a put, because when you sell that credit, like that's what you should do in an emergency. Or I do have this idea also of like selling credits by technical, just purely technical. And then just like kind of having a system to buy them back. So basically, if I sell a credit because it was technically the right time to gather that credit, then I just try to buy it back for like 5% less. You know, I just want to build these little ideas. Like I got like a million of those, like little, you know, widgets or whatever that can do. There's a lot I'm excited to tell you, but I am on low sleep. So like, what am I trying to tell you? Yeah, I think it's like cheaper to just buy a put than to sell a call, because then you have to deal with that sold call. Now, maybe if you sell that call and you take half that and you buy the put, and then you use your buying power, you do a check to make sure you have enough before you place the order, you know, like within whatever reasonable buffer and period of time. If you have the buying power, then you do just buy back that call for like 2 clicks lower, maybe not even that, just like a couple of bucks or whatever, because sold calls are little nukes. And it's hilarious that I've made most of my credits on sold calls. Like it's hilarious in that way, but you don't want to get stuck on the wrong side of a sold call, because it has an infinite downside in the same way that a naked call has an infinite upside, right? So it's just the inverse. Anyway, I just think it's like a lot cheaper to just buy a put that whose delta will make up for that gap. Here's why. Assuming you buy the right put, which is a little bit tricky. It's kind of hard actually. Because puts will move. They're really reactive in different circumstances. One, I think they're really reactive. Everything's really reactive at the money. I think they're more reactive in the money. Obviously, it's going to be dollar for dollar the second they're in the money. So they're going to be most reactive at the money, which is hilarious. If things are ever tanking, the thing you need to do, although you kind of can't do it because one, you can't remember, but two, you can't actually do it. Like it's not actually practical. But if you had a system, what you would do is this. You would look at the cost basis of all your positions, and you would say, all of my positions are falling at once, and the overall portfolio dollar value is decreasing at a velocity that triggers some, like same thing, right? We have a dollar window of the total account equity, and that is maybe even less than a second. Maybe that's like 100 milliseconds. And so it's tracking a rolling window of every dollar in the account. And if the velocity is ever past the threshold for all positions at once, and which would obviously be as well with the total value, I'm just saying you would have separate monitors for both, then you know that something shiz is going down, literally. And so what do? The cheapest thing to do, and it's like ridiculously cheap, it's so cheap, is if you have established positions, just sell the top of all of them for like, I don't know, 0.1% of the position, which will generate enough buying power to purchase a same day. Or you could also sell credits. You could also sell a call and use a credit if you don't want to sell shares. Either way, I actually do like that way because you don't disrupt your cost basis. But again, it's dangerous to have these sold calls. But anyway, I'm just saying you like find a way to sell something. So you got to just, because it has to be able to operate in any conditions. That's why you always have to kind of have something to sell. And so yeah, like then you buy a put that is at your cost basis, like at your cost average. And that might be at the money if it's a new position, but hey, that's what it is. And so all that's possible, super duper possible. In fact, it's like literally almost becoming a matter of just wiring it up. And I'm increasingly like getting an infrastructure that can support these kind of ideas. But what I just got done recently was this WebSocket connection. Why am I doing all this? I've talked about it before. You'll have to look up those videos. What I just got done recently is this WebSocket connection. And it is kind of the backbone of my system. So it's called market flow. Everything talks through market flow. And so if a contract price gets updated anywhere in the system, it's kind of like behooves that service, even if it does it on like the next process or tick or whatever. And you create widgets to make this stuff easy. But like it kind of like benefits the entire system if they then broadcast that out. And that kind of has natural centralizing tendencies anyway. And then everyone on the network instantly sees a price update from market flow. And right now they're all subscribed to every event, and it is a lot of events. So I got to work on that. But yeah, like imagine how many price updates are coming in on every contract that's being traded. First of all, like that, any contract that I have in my tracker is going to be a lot of contracts. And then all that for every trade on every market, on every exchange for both stocks and options. That's a lot of updates coming in, but it's working. And so like whoever built WebSockets built them to be fast because it works pretty well. And why does any of this matter? Okay, yeah. So now I got the price getting updated through a socket connection. Boom, 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 boom. And that's about how fast I'm recalculating the delta. And I've also bumped up my IV cache to like, because I can't calculate my own IV right now. Basically, the way you calculate IV is you read the option price, which is like already dumb because now you're doing a lookup anyway. So like this is a background test that maybe you also have a price model actually, but at some point you need a couple of references. You need to look at a real trade. And so like, right, you have to see what the market is reflecting. And so anyway, I don't think it's like super easy to get those pricing models built. But on the ticker, what was it telling you? Pricing models, Greeks. Well, so I have the price coming in, bum, 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 bum. And at that same rate of speed with a fresh implied volatility, I was telling you how to calculate it. Basically, you have to guess and just guess. It's the same as like mining a Bitcoin. How do you mine a Bitcoin? Well, you just guess a lot of times and then maybe you get one. And so that's kind of the same thing. You just have to guess. But that's a lot of science. It's like, did it work? Okay, so anyway, you got the quotes coming in from the socket. That is updating with every price change, but also every tick of the clock that goes by every second of the day. It's updating the contract's delta. Now, interesting. The delta has at times gapped down unexpectedly. And that actually did happen today, where like, if I look at that print, it was for like a fraction of a nanosecond, but the system is happening so fast that it read that signal and instantly hedged twice. But again, it's okay. It's all just learning. Like, you know, maybe the market will continue to tank tomorrow and I'll be really glad it hedged. And so, but if it did, then I know that my system would be buying a ton of what it bought today, which was Tesla Q and all of like Fang D and like anti-SPY, just any inverse equity it could get its hands on, it was buying. And so, and I got the sell side figured out pretty well as well. I just think you want to always be buying and selling this, like the broad market, and then you want to build rules around a core set of names. And anyway, that's kind of like the app that I want to build, which I can give you a little teaser of here. Somehow should be able to, maybe not. Canva, Discord, let's just try it. Oh, there it is. Okay. So actually, I think it was in Sketch. I'm an old school Sketch guy. When I have to, just, sometimes you need Sketch for the muscle memory. Do I not have it? Sketch. Oh, there it is. No, OBS Sketch. Okay. This guy, this is what I want to build. And so this is going to be like the auto trader. For real, this is 100% serious. And so, yeah, I think you just want to constantly be booking gains on a bunch of names. Gains as even if they're pennies, because first of all, like, especially when you're establishing a position, you're not going to have any returns. And secondly, because you just don't know what the price is going to be. Nobody can know. And so you sell gains while you got them from everyone to begin with. But what you do is you begin to protect a few names. And so, like, maybe you start with like 3 names and you're like, these are the unsellables or whatever. And that's where you start building core equity and core position. But how do you fund those reliably? You have to take advantage of the ebbs and flows of the market. And so if you buy into my system, then you can get access to this order flow and automated trading strategy that makes it so you can say, I'm interested in X, Y, and Z. Put that into the app, right? I'm bearish, I'm bullish, whatever your interests are, put that into the app. You can get as granular as you'd like. You can say only buy on days where it's technically a good reading at this interval, like the day, the week, the month, the quarter. And then you can size those differently. But the point is, like, the really easy version is click, 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 X, Y, Z, you're subbed. Okay, do you want to put in your sentiment? Okay, sure, fine, put in your sentiment, whatever. But it's basically on autopilot the second you hit bop, bop, bop. And what does the autopilot do? Well, it's not going to buy that name on just any day. And it's certainly not going to buy that name on a day where it's very bearish on that day. It's going to buy it on a day that it's bullish. And hopefully what it's going to do is continuously buy it on a streak of bullish days as it goes up and up and up. And then, like, once it gets above a certain position size, I do think it makes sense to, like, you have to cap it at some point, right? And so people would probably say 5 or 10. I'll say 20. But, like, anything above 20, you got to start aggressively selling any profits or whatever. But this is the guy who created losses for me today, in part because it was kind of like intentional or whatever. But it was, I don't even know if it was bad. Because, like, if you really look at it, like, that entire position's cost basis improved quite a bit. And so question is, like, is it going to keep that cost basis, or is it going to generate too many losses? I don't know. Is it going to be able to, like, grow? Because one of the problems with this auto trader so far is it, like, hedges too much. But these are all the rules that I'm, like, learning. I'm not prescribing anything to the people who buy into my system. You configure the trader to do whatever you want, including nothing, right? If you're interested in the company, you can say buy it once a day at noon. You could say buy it whenever the RSI is below 30. You could say sell it whenever the RSI is above 30. You can say buy it on bull days. You could say buy it on bear days, whatever you want. Like, you can configure it however you want. I'm not saying I know how to configure these auto traders. I'm just saying I know how to build an auto trader, which is according to my preferences. And I built a lot of automation at billion-dollar companies in the past, and I did it for years and years. And while I'm not sure of this, I'm sure at least some of it is probably still active today. That's because even like anything that can be automated basically unlocks a ton of value. And that's what I'm looking to build with these systems is I don't want to look at the market, actually. I don't actually want to. I don't want to look at technical analysis or that. I like that stuff, but like I enjoy it. I don't want to have to do it. And if you're trading in the world that I'm interested in trading in and will get back to as soon as I possibly can, which is expiring options, and then you need a lot of automation. You need a lot of tools. And so all that's to say, I'm like trying to build this for myself basically, but then in the back of my mind, it's very possible to reskin a brokerage and then they do all the hard, complicated stuff and you just kind of like do the safe, like, you know, like I wouldn't have to be worrying about customer funds or know your customer or legal or compliance or any of that. I would just be executing trades automatically by the system. And it would, like, I wouldn't even know, you know, like it's all anonymized or whatever. Not really. I'm just saying like there's no manual thing happening. It's all just by the order flow. And so, and the technicals but the biggest thing that matters is it's by how the user configures it. So right now I have my guy configured on bull signals to buy, on bear signals to sell. And maybe I should only buy on bull, and instead of selling on bull, I should buy puts, or I should buy inverse equity or something else. I don't know. Maybe I shouldn't sell. But like, those are the kind of rules I want to be able to figure out. And of course, in the ultimate version, once we get a couple of people helping out writing some of this code, I'm gonna like, one of the obvious things is a testable system, so that before you deploy a change into your portfolio, you can backtest it to simulate the results, and you can have it run in like some kind of like safe mode for a couple of sessions, or you can just go live right away. But and there's lots of interesting mechanics I think I can like think of there to make that process safe as well. And so that's kind of what I'm interested in building, is just like the very basic of tools, the very like clearly things that could be automated, which if automated would reduce risk by, I don't know, like it's the risk right now is like manifold in every direction, in every product. And there have to be these tools that exist for professionals. I guarantee they exist to some degree. I know they exist, right? Because to execute a sweep order, that requires automation. There's no way a human could do that. And so algorithmic trading, right? So like, I just want to make that safe kind of system where I don't have to worry about like deposits and managing money or any of that stuff. I just worry about the UI. You know, I just make it actually do the auto task. When you hit subscribe, it follows the flow or whatever, or however you customize it. So that's a project I'm excited to be working on right now, and I'm spending a good amount of time on. But it's pretty fun. It's pretty fun, and I'm starting to make a little bit of headway, as it were, in both areas that I think are really important, which is the buy side and the sell side, like the long side and the short side. Like how do you make buy decisions? I've been trading markets for years, for like a decade. I've owned stock for over a decade, like of my life or whatever. And I can't tell you, I know less about what's going to happen now than ever. Nobody knows. It is impossible to know. And so you really have to build a system that accounts for the fact that like anything can happen. Now, how do you do that without like getting a bunch of dummy names in your portfolio that you don't really care about or whatever, and your portfolio gets no gains because it's like overly hedged in every direction or whatever? that is where I think the order flow comes in. And that's why I think it's like awesome to like, you just don't want to be a bull when you're in a bear streak and you don't know how long the bear streak is going to last. And there are some technical indicators that can give you some clues, but those can be snapped in half by a bunch of sellers every single time. And unless there's buyers, and you just don't know who's buying and who's selling, but we have insights into it as it's happening live, which is like required by the law, which is awesome. It's like a very small degree of like very good transparency that we can use to see when these players what they're doing live. And so if the market is going to tank, guarantee there's going to be a bunch of people hot on the news or whatever is causing the price to decline, and they're going to be doing large orders of puts. And of course, the most informed people probably are going to be those who have the most capital and work in finance or whatever. They're going to get a text. They're going to text somebody else. Boom, it happens. And so then my system is reading the trade through the socket connection. So like I see it within, I do believe it's milliseconds. I think it's milliseconds of it actually happening. And depending on the needs of my portfolio and what my automator has strategized, I don't even have to be looking at my phone. The right thing is going to happen because of that signal. That is what I'm interested in selling for well over $100 a month, but I'm going to start at 50, but really the first maybe, I don't know, 1,000 people, maybe not that, but a good amount of people will get half off of that even. Because I know that this is possible to build, but it must be funded. And the cool thing about it is I'll, of course, have it in a play mode or a simulation mode where you can test everything before you actually put any real capital in. And yeah, it's just a skin. It's just like an interface, which I think it'll be like a fun thing to work on. So yeah, my automator is getting pretty good, where since I do have, this is all the ways that we de-risk the market and why we know that the other players who haven't even attempted this stuff just don't care because it's like the lowest hanging fruit ever. That's just not what they're interested in. That's not their priority. Is to like help people like save their money. No. They're a broker. They're there to help you go broke. Like it's literally their job. So yeah, like, the system is getting a socket connection of all of the price updates that is recalculating the delta. I have to now ease that signal in some kind of a moving average because I think that trigger today, I think the markets will be up tomorrow. I don't know. Like, I have no idea. It was an epic crash. Like, Rivian down 10%. Like, that they're below where they were when they announced the stock sale or whatever. ARK at 37. I mean, these are getting close to bottom. Like, could we go to 35? Of course. Could we go to 15? Could happen. That's why we have to have a system. So today, my system might have done the right thing, which was it bought a ton of inverse Tesla, and it hedged that hood contract, that 99 Delta contract. But it's because it fell way below 99. It was like a 96 for like a good long while. And then I just think like it got one tick below, boom. And then it was configured to sell 2 puts. So that sucks. But it's not that big of a deal. It really is not that big of a deal. Better that than the opposite, I guess. And so then it not fire off or whatever. Because the system has to be reactive. And so now I have like this, a lot of positive delta would have to be gained before I'm back to my original delta in terms of what was just offset with that negative delta. But I also don't really want to sell these positions. I got to think about how to deal with that in an automated way. Maybe past a profit threshold, something. I don't know. I mean, if ever there was a place to be aggressive on taking profits, it's on option contracts. So that might be something to think about. But again, like that can be part of the system. Look at all my positions, any that are above 20% sell, when 30 minutes, an hour before every market close, 5 minutes before, whatever you can imagine. And so I think those programs and tools can really make these markets a lot safer for people and make a difference in their returns. But what it can definitely do is allow them to play with the fun part of the markets, which is margin and options. And in my opinion, there's no point in being in the markets if you're not using margin and options, because unless you're just DCing, you can use my system and not use margin and options. Obviously, you could. But like, you want to have a system that creates and protects and pays off new margin. And I think that's best done through being completely agnostic on the market, the macro, and the price of anything ever. Because I just don't believe anyone knows. I don't believe it for a second that anyone knows. They don't know. So you use my system because they don't know. Because you can't know, and I know you can't know. And that's why you automate it through a strategy that you define, which is you don't just YOLO 100 grand into Tesla. You split it over, 30 sessions. And then in those 30 sessions, you turn on the technical flag and the sentiment flag, and you set your sentiment. And then it will automatically hedge for you, even if you're bullish. It's not going to buy on days that is bearish. It's not going to do that. Like, I know it's not going to do that. And so, in fact, what it will do, if you've configured it like mine, is buy inverse equity, like a lot of it. But like, it's just my opinion. I don't know how these trading bots should be configured. I just know that they can be configured, and that there is no way to do what I see today is astounding, because it's like not that hard. So hopefully that'll be something I can bring to market in a fun way where it's safe, because you have the simulation mode, and you'll get to see some of these ideas that I think are like totally reasonable. Delta hedge, auto trader, market flow, dead man switch is going to be a special one, which I'm going to be really excited to work on, and a ton of other like little widgets as well, like just a position cleanup things. And so, yeah, lots of little automations I want to build, but like they're all going to be centered around the primary tools, which is information, that's market flow, the buy side, that's auto trader, the hedge side, the sell side, that's delta hedge. The buy side is long, the sell side is short. And so between those three, I think we can build like a repository of information and access to signals that will improve our trades. And I'll tell you, like, I have a portfolio where I was doing things business as usual, and I have a portfolio with this new trader on, and the new trader was like 10 times more efficient today. Like, first of all, I had a ton of stuff to sell, because yesterday it was buying a ton of inverse equity on Tesla and on Nvidia and on Apple. And so today, when it went even lower, like I already had a base or whatever, but like that's only ever going to continue. And it's a smart system. It knows how like margin works and stuff. And so like if it gets low on buying power, it's going to look at high margin requirement positions with returns and liberate those. All of these are rules that anyone would be able to set through the interface. Like, that's kind of the fun thing with building it, is like everything I build is a layer, and I just adding it all on layer by layer, and that's how I'm going to bring it together. But like, really, it's like not too complicated. It's just a lot of work. And so the concepts aren't hard. It's simple. It's not easy. As they say. It's simple. It's not easy. So what else? What else? I guess next up for me, development wise, in terms of like what else other than Delta Hedge is just not working, but it's really not that easy to get it to work reliably. Like I need a ton. I need so much information. Like I need to know everything I bought yesterday. I need to know the history of these contracts, all of my positions as they're changing second by second. Like not a second is too long. I have to have triggered actions that broadcast a market flow, and those cause other jobs to run, which updates the central registry, and then things actually would be perfectly updated. I should do that. That actually solves it. So there you go. I solved a little thing live with you guys. But the point is, I got all these systems that are all trying to like improve returns. Not really. They're trying to like, I would have never attempted this before I found out that you could just buy access to the order flow of the markets. Knowing that you have all of the information. It's like operating, it's like having an app. No, it's like looking outside and seeing the weather for what is it. It's just looking outside. Maybe you crack open the window, right? Like, it's not even, that's even a bad analogy. It's like stepping outside and like just experiencing the weather. That's what access to the live order flow is. And so why make any predictions on price? Why make any assumptions on the macro or any of that shit? It doesn't make any sense. You should just do what the market is doing as it's happening every single time and put your bias into that. And so the right way to do that is to be discovered, but that it is possible. Like tons of people do this. I'm not like the first guy in history to write a trading bot, right? Like algorithmic trading has been here for a good long time, but I don't think anyone will have done it quite in my way. And even if they copy it or whatever, it's still like, I don't think anyone sees it quite the way I see it. And if I'm wrong about that, I'll use their tool if it's better than mine and be happy to do that for real. Like the thing that I think is important to get across about money is that it's very real when you don't have money, and it sucks to feel broke and all that stuff. But like, it is a little bit super fake. Like, I don't know how to say it. I just don't think money is going to be a part of the human civilization like it is today, where it's like the end all be all of everything or whatever. I don't think it's going to be that way. I don't think it can be that way. I don't think it was that way until capitalism. And I'm not down on capitalism. I love capitalism. I love anything that gives shit for free. Like, that's my favorite. But like, it doesn't make sense that the people who work the hardest in this world get paid the least, and the people who do nothing and contribute nothing rake in billions. So like, the system is broken. And I think there's a way to not fix the system, but like more fix the game so it works for us in our direction. And at least it helps us not work against ourselves quite so easily. Because when all this stuff is automatic, like you kind of see it and you're like, what would I do different? I don't know what I would do different. Like when I watch this auto trader do stuff, I mean, this guy did create a bunch of losses today because of that loss prevention mechanism failure I told you about. But in general, it is pretty fun to see what they're doing. And yeah, so like I'll try to get this all together in the next couple of months so that people can actually try out what I'm talking about, and that would be really, really very fun. So I think that's the show for today. Thanks for your time and attention and all the good vibes and everything that is good in the world. May there be more of it and less killing of innocent people and doing bad stuff. That's it. Go no.